Welcome back to Making Money Matter, ladies and gentlemen. My name's Kerry Stevenson. I'm coming to you from the Rule Investment Symposium, a little bit noisy in the background here. It's been a fantastic 4 days, and I've managed to grab hold of Dr. Nomi Prins. Now, Dr. Prins was here as a speaker. She is a geopolitical macroeconomist. She has been so busy, and I'm thrilled, last day of the conference, to be able to grab Nomi and ask her for a full thing. So she runs Prinsights Global, and you can find all of her, teachings and writings, etc., at prinsights.substack.com. So it's prinsights.substack.com. I'll put the links down below. But for the moment, welcome, Nomi. Great to see you. Always good to see you at this conference.
Always great to see you. I feel like this year has just flown by, and this conference is amazing. I heard it has more, like by 30% attendees than last year.
Yep.
And it just shows you that we're in the right space at the right time globally. And it's just amazing to always catch up with you here.
It's always good to catch up with you. But before we dive into that sort of macroeconomy type thing, because CPI came out this morning, tell us a little bit about Prinsights Global. What are you doing? What should people, if they went to prinsights.substack.com, what would they be finding there?
So I am basically taking all of the work and all the experience and all the ongoing on the ground, boots on the ground analysis that I do at companies and mines around the world, and really putting it in one place so that subscribers, people can take a look at what I'm thinking as I'm thinking it.
Yep.
And also get real actionable ideas and strategies that they can consider for themselves. And so right now we're at such a key moment of geopolitical and economic and financial connection and transformation that there are just so many investment trends and economic trends popping up. And I wanted to have all of the information for that, the research for that in one place. So Prinsights Global, or Prinsights Global is my way of really putting together all of my thoughts and all of my experience from the past into what's happening going forward.
And tell us a little bit about your past that gives you that ability to, I guess, unpack some of these trends and some of the transitions that we're going through.
Yeah, so I started off my first career, my first job, if you will, on Wall Street. I was an analyst at Chase Manhattan Bank. I was a strategist at Lehman Brothers. And then I went to create my own department, my own analytics department for Bear Stearns in London in the 90s. Then I came back and I was managing director at Goldman Sachs, where I ran two departments, two strategic quantitative analysis departments. So lots of geeks.
Wow.
Very geeky. But during that entire time, I was fortunate to be able to travel the world and to speak with central bankers around the world, to speak with pension fund leaders across the globe, and to really dive deep into the circumstances of what was happening behind their individual countries, their individual economics and finances, and how they sort of related to the world at large.
Wow.
Of course, from a standpoint of finance and Wall Street, but it really cultivated in me this need to get out from behind my desk. And even though Wall Street makes you do a lot of hours at your desk, and the investment community makes that happen, I was very involved in pushing myself to be out on the road speaking with people and looking at things beyond my desk. And that's filtered into what I do with mining and commodities. I'm constantly traveling. I logged in over 100,000 miles last year, and I'm par for more this year.
That's crazy.
To see what's going on the ground.
Yeah. And I think we're here at this conference, and I know that you're you're non-exec director of Meteoric Resources, which has got a big project in Brazil. But let's push it back if we can to CPI numbers came out this morning. I think they're a little bit lower. What's that telling us?
Right, so inflation numbers, CPI monthly, came out for May at just up 0.1%.
Up 0.1, okay.
But that was lower than expectations, right? So the market expectation was for that to be up 0.2% or up 0.3%. What does that mean? It means prices are still rising on a month-by-month basis, but just less quickly than in certain prior months. So from a trend perspective, inflation still exists. Overall annual inflation is now at 3% if we add in the current last month of a rise of 0.1%. So it's still above the 2% that the Fed talks about and likes to look at. And we still are paying more for everything.
Yes.
Because just because inflation slows down doesn't mean prices go down. They're still going up, just less quickly.
Yep.
So that's what we're seeing right now.
All right. What have you seen lately? Okay, so we know inflation's sticky. We know that people are under a little bit of pressure. We're here at the Rule Investment Symposium. This is very much resources led. Do you think, because my audience out there, they're very much an investor audience, they're looking at this, it's called making money matter for a reason.
Sure.
How do they make their money matter, especially in inflationary times? Are you seeing a trend to potentially resources being a good way for people to invest in the future? And by the way, ladies and gentlemen, not financial advice. Make sure you do your own research. I'm just asking Nomi what her thoughts are in this current environment to help you understand where the trends are going and what she's seeing in the market.
Yeah, that's a great question. The title of my opening talk here, my keynote speech here, was The Real Asset Big Bang.
That's right.
And that is not, as I said to the audience here at the Rick Rule Symposium, that was not taken lightly, that title. I mean, I really am looking at what's occurring right now in the world, and also even what's occurred over the last year. Since this same conference last year, gold prices are up 24%, silver prices are up 49%, copper prices are up 27%, uranium prices are up 60%. So we are already seeing the beginnings of the irrelevancy of central bank monetary policy to impact the demand and therefore the price appreciation of real assets.
Okay.
And therefore for investors, it's very important to consider these real assets in portfolios. Gold, of course, silver.
My favorite topic.
Silver has been a big topic here as well, because a lot of mining companies mine both gold and silver, and also silver, of course, is much cheaper than gold, and it's appreciated more quickly. Plus, it has use values in the big energy transformation and transition that the world is going to continue to experience. And so those have done well. Copper is a big demand resource, and uranium is at the crux of national energy and security policy now for the United States, the UK, and a lot of other nations around the world, as they seek to basically shore up clean energy. Nuclear energy is actually in between traditional fossil fuel-based energy and renewable energy sources like solar and wind, which can be less reliable. So nuclear energy has that reliability factor, and it doesn't emit the kind of carbons that other things do. Absolutely not. And so therefore it's clean energy, and it's also therefore more efficient. It's economically efficient as well as good for the environment. And this has been a big trend as we've seen prices, and I think that's going to continue as well.
It's interesting. You know, in Australia we have, I think it's the third largest supply of uranium in the world, but yet we can't use it in Australia. Having said that, Peter Dutton, the leader of the opposition, is allegedly going to put forward a nuclear energy policy going forward. And I really hope, as Australia, we start to wake up, because as you just said, uranium, it's clean energy, and it's that difference between the fossil fuels and the solar wind type thing. Are you looking potentially at uranium companies as something that in the future will be a good one to invest in? We've got Boss Energy down in Australia, we've got Deep Yellow, so we've got a number of companies, and I'm not asking you to suggest that people, but as a commodity, you think that that's going to be stronger for longer, because it's had its challenges.
It has had challenges, but in the past, when we've seen uranium prices basically spike up and then drop dramatically about a decade or so ago, there weren't as many geopolitical forces and energy transformation forces behind nuclear energy. Right. So when you had disasters in nuclear power plants, they really impacted the entire industry. Effectively, supply kind of stopped because demand stopped, right? And so therefore we had that really deep decline in prices. That's not what's happening right now. It's a bit different. Right now, geopolitics are actually behind finding independent sources of uranium in order to supply nuclear power. With Australia and companies like Boss and Deep Yellow, and Boss has projects actually in Australia. So that's, for example, an ally of the United States, and it's a very secure country from the standpoint of not a lot of political unrest or not a lot of civil unrest, and some more security from that perspective. And the United States, of course, about a year and a half ago, signed a nuclear submarine agreement.
Oh, that's right, the AUKUS.
U.S. and Australia. That's right. So obviously an ally of the United States. And so what's going to be more important when looking, if you're an investor looking at uranium miners is to make sure that their projects are in allied countries.
Right.
I think it's important for them to be allied to the United States because, let's face it, they have big pockets and they have big demand. And they have, the United States government has written policies and enacted law in just the last year to basically provide more support, more subsidies, and more policies behind nuclear energy and domestic supply.
Okay.
And that's going to drive the price of uranium up because there's going to be a need for domestic supply, therefore not from Russia, not from Kazakhstan, but from Australia, from the United States, from Canada, and basically places that are allies of the United States. And there's only a limited amount of those from a percentage basis. And so the miners involved and the companies involved in those areas that have good, solid relationships with local governments, because it's important to make sure Indigenous people around your mine actually support the project.
Yes.
Up through national governments. So it's not like you need to just close your eyes and pick a miner. They have to have these criteria as part of their policies themselves.
And it's interesting, you just said something which makes me smile, which is don't close your eyes and pick any miner. If again, these are our thoughts, but if you were to look at something like that, what should people be cautious of, I guess, because there's plenty to choose from. There's plenty of commodities to choose from.
Sure.
We've got coal, we've got gold, we've got copper, we've got uranium,
right.
we've got everything.
Yeah.
It's a busy market.
It is.
How do you drill down,
right.
excuse the pun,
right.
and figure out what to look for?
Well, I think that's a great question. It's a big question because some investors aren't comfortable buying 5 different commodities with the 5 different forms of miners that are behind them. So first and foremost, it's about choosing what any one individual is comfortable with. So example with gold. Gold obviously has gone up. We like gold. Central banks are buying gold, particularly in sort of the eastern part of the world, China, India, Turkey, and so forth. They're buying gold. They're going to continue to buy gold to diversify against the dollar. Gold mining companies have underperformed the price of gold.
Yeah.
And so when you look at if you want to invest instead of sort of a gold-backed situation, whether it's a gold ETF that's backed by pure gold, or whether it's in miners, you got to take a look at the projects of those miners. How much gold is underground? How much is the cost? Where is the demand coming from? Are they going to see demand from the West? I think they will, because at some point, Western investors and countries are going to want, again, their own supply. And so I think that's going to close the gap between some of those mining companies and what we see right now with prices. But
why haven't prices, because as you rightly said, the gold price is up over 20%, but especially the small caps in the gold sector, they haven't caught up. Do you think that they are going to catch up, or is there just a little bit still just disinterest there?
No, I think they're gonna catch up as an investment, and the 2 reasons I haven't. One is because the countries that are buying gold are buying gold. They're not buying
physical gold, right?
They're not buying miners, and even Chinese residents have been buying gold through ETFs in China, and they have seen, according to the World Council Gold Council organization, they've seen record inflows into ETFs. But these ETFs are mostly related to specifically backed by real gold.
Yeah.
As a result, there's just more buying in physical gold. So when do the miners who actually mine the physical gold catch up in that equation? Well, first of all, they haven't because of the cost. When gold was at a lower price, it was more expensive. The ratio between what you mine and what you require to mine more supply, the energy payments, everything else in terms of doing that, than now when gold is higher. We're going to see a whole lot of earnings come out for many mining companies throughout the world. And over the last quarter, they've been earning against $2,300, $2,400 gold per ounce. That's going to increase their capital flows. That's going to increase the value of their equity, and that's going to allow them to basically invest make the cost of their investment in exploration and extracting more gold from the ground cheaper. That's going to look better financially, and I think investors are going to then turn to the better miners in those classes. And that's a whole other conversation, and people need to do their diligence on individual miners.
Yes.
And there will be highlighted mining companies that have all those things going for them, and I think that's where you're going to see that gap between mining and the price of gold start to come close.
At the top of this conversation, you mentioned some numbers, and one of them was gold's up 24%, silver 49%. Has silver had its run, do you think?
I don't think so. First of all,
Oh, wow.
silver is still only 60% of its highs. So silver hasn't actually gotten back to its highs, whereas gold is at its all-time highs. And again,
Okay.
I believe will continue to trend higher. So what we've seen is silver doing a faster catch-up this year relative to gold. And also silver has use values that gold doesn't have in specifically the energy transformation, in
Okay.
creating more highly conductive and therefore cheaper ways of distributing energy and new power plants and distribution lines and new factories, plants for AI and everything else. Silver is one of the major components of those builds. So there's a
Wow.
physical need for silver. And then there's the fact that as inflation, even though it's come down in pace, it still remains high in price, continues to be relatively higher, will be over, I think, 2, 3, even 4%, depending on the month or the quarter, not consistently for quite some time. Silver has inflation hedging properties as well. So it's
Right.
cheaper to get than gold.
Yep.
It has some of the similar properties. It has additional uses in the energy transformation space. And also you can actually buy a coin of silver. You can buy, you can give someone a gift of an ounce of silver because
That's
it's like
true.
31 or 32 US dollars,
Yeah.
whatever it is in Australian dollars. You can't quite do that with a gold coin.
No.
And so from the standpoint of investors getting into the space of precious metals, it just offers a much more economically sort of palatable way of doing that.
And here's a little tip for all of you out there. You know what I give my godchildren for their birthdays and Christmas? I give them either, I use my Rush Gold account and give them some gold, or, excuse me, I give them a 1 ounce silver coin.
Because you can.
Because it's great.
That's right.
And it teaches them that's money. Right. Because the paper that we use is not.
That's right.
Right.
And those two things are really great because even there are so many new platforms by which people can buy physical gold without paying $2,400.
Yeah.
But you can't buy a gold coin that's 100% backed by gold for less than what it's trading at, whereas silver, again, is much less. So you can do both of those investments in gold and silver in different ways.
Yeah, that's a really good point. All right, let's just wrap it up, if you like, Nomi, with what you're seeing as the trends, as we said right at the start. What would you say to our beautiful audience out there are the trends that you're seeing at the moment? So let them know.
Right. So I'm basically seeing, as we've been talking about, geopolitics moving towards supporting more natural resources, particularly commodities from under the ground, to extraction, to sourcing, to distribution, processing, than ever before in order to shore up national security, in order to shore up their component of the energy transformation. I see that continuing. And I also see central banks continuing to buy gold to diversify against the US dollar and to create trade relationships with each other that are not simply backed by US dollars. Not to say there's going to be a gold standard coming back, but to have another asset in their reserves that they can basically look to equate with each other's reserves. And I also see a lot more interest across the commodity curve. So we talked about gold and silver, but as investors get comfortable, there are other commodities that have use values in the energy transformation and inflation fighting space, such as copper, such as uranium, such as rare earth elements if you're more adventurous in your investing, but again, do your diligence.
And that's that's what I often say to people. Guys, one of the things we constantly learn when we're here at the Rule Investment Symposium is you've got to do your homework. You've got to do your research. Don't just blindly, and as Dr. Prins said right at the start, you don't blindly go into some of these investments. It's your hard-earned wealth. Look after, make wise investment decisions as you go forward. But both of us have been talking over the past few days that really what we're seeing at the moment is just the start, we think, of what is going to be an extraordinary resources bull run. So, as I said at the start, I'll put the links below, but you can find Dr. Nomi Prins. As I said at the start, she's a geopolitical macroeconomist, and you can find all of her writings at, I have to have a look at this and make sure I get it right, prinsights.substack.com. This is Kerry Stevenson for Making Money Matter. Thanks so much for joining me.
Thanks, Kerry.